Good evening, everyone. Time for another silver update. This is the daily chart of the Japanese yen euro. And as you can see, we are witnessing in real time the utter collapse of the Japanese yen. Now, the Japanese yen US dollar is not quite as bad as the yen collapse against the euro. This is going to be the opposite because this is US dollar yen. But this spike here is the yen weakening against the dollar. You can see a move from roughly 75 to nearly 92 now. So a huge move. As I pointed out in the last few videos, as the euro strengthens, the yen is weakening. That has the effect of keeping the dollar nearly in the same place, although it's my opinion that we're going to see a rapid collapse in the dollar index once this rejiggering of the global central bank money printing has finished. So now the silver chart has been very strange. We had the rally that was based upon the GDP number, which would indicate more printing of money. Big rally. Then, of course, Bernanke opened his big yapper. And once that happened, then the silver shorts piled on. We can probably see that in the volume. And there you go. So a bunch of buyers, and then a bunch of sellers. So we're still flat at around 31.50. That's a very, very good price for silver. We're going to see that when we look at the numismatics I'm going to review tonight. But first I wanted to take you over to the blog. And there is a video. Actually, this is back to Unconventional Finance, which is featured on the blog. But this is an interview. The Silver All-Stars. It's Elijah Johnson's channel. And I can't say enough about this guy. He's, from my perspective, relatively new. But he's just coming on like gangbusters. He's very professional. And this is a roundtable with Bill Murphy, Bixweir, and ranting Andy Hoffman. So very, very good. I suggest that you listen to this. And one of the things that really struck me about this was when Andy Hoffman pointed out that during the 2008 SmackDown, of course, we know we had the Bear Stearns top in the spring, and then the crash down to 850. Andy Hoffman pointed out that we never saw those prices. Now that's very important. I pointed that out many times, that the Silver Eagles and I watched them daily from roughly March when the Bear Stearns collapse happened and the Jason Hummel missive went out about the shortage, and there was a shortage for quite a period of time on physical silver. I watched the price of Silver Eagles during the time frame of March of that year through the fall during the entire collapse. I never saw a print on Silver Eagles below $16 an ounce. So yes, the price of silver went from 21 to 850, but the price of the real thing, as Andy Hoffman pointed out, those weren't real prices because you simply couldn't get silver at those prices. They were fake prices. They were paper prices. But I encourage you to listen to this roundtable. It's very informative, and I just want to congratulate Elijah on doing a great job. Now, before I get to the numismatics, because I had someone request that I do a review, I'm just going to redo a review of one coin, but I don't have time to do all of the buys and recommendations and things that I thought might be a good investment. Some turned out to be very good investments. Some turned out to be not the greatest. One of the things now, if you followed my Somali silver elephant series, where I covered that, we now have a strange situation where apparently the Somali government is disallowing that Bavarian mint, German mint, to have that. Now APMEX has pulled those coins and you can't find them. So is that going to be a big numismatic premium? I don't know. We'll have to wait and see. But before we get to the numismatics, I wanted to take you over to a wage statistics page. This is a government page. This is from ssa.gov. And this is a page that will give you net compensation. You can see here on the left that you can put in whatever years you want. I've already gone back and checked them. It's roughly 6 trillion, and 6 trillion it goes down 5 if you go back a number of years. But for the last 8 years or so, you're talking about roughly 5 to 6 trillion in total compensation. Now, the reason I'm bringing this up is because I want to look at the investments that people make and compare that to the amount of silver that can be stacked. But before I do that, I wanted you to notice quickly is that if you look at the table, the way the government has broken this down, there's some interesting things that stand out. First of all, we want to look at the number of people. You can see that the big number is right here at the bottom, and that's the people that earn between 1 cent and $5,000. That's 23 million people. Between 5,000 and 10,000, that's another 13 million, and you can see the numbers decrease on a steady rate from there. Now, the other thing is the aggregate amount. That's going to be the amount of wages total for the total number of people for that wage rate. And you can see here this line item, 35 to 39,000 or 35 to 40,000 at $306 billion. That is the largest of these. So that is the median right there. And I was surprised to see that it's only a wage of $35 to $40,000. Once you get above that wage, the number of people collecting it decreases. You can see you've got at the very top, you've got 93 people collecting a wage of $50 million plus. So I guess those are CEOs. This last group of 1,493. I guess they're going to be CEOs of corrupt Wall Street companies. But anyway, the reason I brought this page up is to show you the contributions to the retirement plan. So your taxes, when you pay your taxes on your wages, you have a category that is pre-tax. It's not taxed because you're putting it away into your 401k. You don't pay taxes on that money until you take the money out. And you can see you have these two line items, contributions and distributions. Now, if you go back in the years, this is fairly consistent. The number stays $200 to $220 billion roughly. So we're talking about Americans putting away, if you do the percentages, you're talking almost 4% of the gross wages. Again, that's $6 trillion is the gross wages that all the wage earners earn in America. Now, they're taking about 4% of those wages and they're investing them, and that's going to be, I'm guessing, I'm not certain, but I'm guessing it's 401k plans or KIOs or IRAs or whatever those are. So this is going to be the number of dollars that people are putting away, trying to save for the future. Again, just in this one particular program that is pre-tax. So I wanted to examine these numbers and see what that would mean for silver to give you a perspective of what the investment demand would need to be to make a difference in the silver market. So let's bring out the calculator and take a look at that. We're talking about $221 billion, and I'm going to assume some kind of historical ratio of 10% for the precious metals. That's going to be what your mainstream Wall Street economists have traditionally recommended, is about 10%. That's going to be $20 billion. And so if we go by the Eric Sprott dollar for dollar, we're assuming physical investment. The dollar for dollar would be 50% for gold, 50% for silver. So 10% of that figure allotted towards precious metals is going to yield about $20 billion. and half of that is going to be $10 billion. So if we take $10 billion, and that's going to be allotted towards physical silver, and divide that by the current price, we're going to get 312 million ounces. So based on those figures alone, based on the figures of what Americans are putting away for their retirement into their 401ks, if they lost trust in that system, diverted their money, whether that's by reducing their contribution percentage, which again is about 4% according to these figures, or if they just simply borrowed that money from their 401k and turned around and bought physical silver, you can see that if just 5% of those investment monies were directed towards physical silver, you would have a yearly purchase amount of 312 million ounces. Now again, that's just Americans, and you know what the figures are. I've covered them many times. Anywhere from 800 million ounces, and then with recycling, possibly a billion ounces, but a huge chunk is used by manufacturing. So this number and this number alone is enough to turn the tide and cause, in my opinion, cause a run on silver. And so that's just a very, very small number of people investing in physical silver. It's just a matter of getting the word out and getting those people to change the behavior. Instead of handing $221 billion a year to the organized criminals on Wall Street and Wall Street banks, to turn around and take that money and invest it in physical silver and save it themselves. These people, and this is what I pointed out many, many times, the people have the power to change the game. The people have the power to end the reign of the paper banksters. It's right there in their hands right now. Again, I've covered the original Over the Rainbow Wizard of Oz story. You know that they were silver slippers. They weren't ruby slippers, and of course those silver slippers represented the power to return to Kansas, which is the power to return back to sound money. And of course the people have that power right now. All they have to do is believe and act, and so that's very important. But I wanted to cover on the numismatic point a video that I did back in August of 2011, and that was about numismatics. I'm going to cover what I did there and then revisit it to show you how there has been nothing but improvement since that point in time. Now I'm going to jump into the video where I'm talking about the premium and the calculation of the premium based on the price, and that percentage. You're going to see it was about a 23% premium at that point. Was the spot price. And I paid $21.44. So I paid a $4.19 premium at that time. Now that is percentage-wise. We'll take I think I said 17.25. So we'll take 17.25. Just use 4. We'll use 17. So 4 divided by 17. That's a 23% premium. So that's a fairly significant premium that I paid at that time. And that was I bought 50 of the 2010 Year of the Tiger 1 ounce. This is Lunar Series 2. I paid $21.44 for those coins. So, okay, so that is the video where I revisited that purchase, which again was in 2009. At that point in time, it was a 23% premium for the coin. The coin cost $21.44, and the price of silver at that time was roughly about $17.25. So a really big premium for that coin. Now let's go and take a look at that coin today, and we're going to start off with APMEX. Now that's not really going to be indicative of where we're at just because there are so few. So you can see when you put in your number, they only have 8. They're asking $99.99 for the coin, and again, that's not really indicative of what its value is because they just don't have any. So let's jump over to eBay and take a look. This is just one auction of that coin, and you can see here there were 30 bids for the coin. It ended up going for $84.05, and it was free shipping, so you can subtract that. Now if you go back and look, I've listed them. I think the lowest price I saw was $68. So looking back on that coin, which at the time cost me a 23% premium, had to pay $4 above spot to get that coin when silver was only about 17.5 bucks. Again, if you revisit that and look at it, you can see there's no risk in stacking these semi-numismatic coins. They just simply go up, up, and up. Part of that is the limited mintage on these coins, the demand by collectors. There's just so few of them that were made, and that's going to be the case going forward as silver becomes rarer and rarer. And of course, you're going to see mints like the Perth Mint become more and more reluctant to part with this natural resource. Much of it mined there within the country. The rest of it is going to have to be imported. And I've covered that story before with the Silver Eagle. We're already crossing the Rubicon now where we're having to import silver as the amount of silver mined in the United States continues to decrease. They're going to have to import silver to mint those Silver Eagles as that demand continues to rise. So we're rapidly approaching, in my opinion, the point, a break point, where we have a shortage of physical silver, a very, very high demand, and of course, once the price of silver crosses through the $50 price, and I'm going to have to do a video on the concept of the Giffen good and how that works. But needless to say, silver is one of those things that when it crosses into new all-time highs, it's actually going to generate interest that is phenomenal. And you can see from the statistics that the amount of money that Americans continue to pour into the Wall Street casino is a very, very large amount of dollars. Again, this is just the contributions into the 401ks and the other things. This is not any other investments. This is just one category, and you can see that even if 5% of those monies were diverted towards physical silver, we'd be talking 300 plus million ounces, and of course that would be game over for the bankers. And we'll talk to you next time.